Hello and good morning. Good morning. Happy Tuesday. All right. Hello, and when you pop on, let me know who you are and where you're from. Oops. I did so well yesterday, and today I'm screwing it up, but that's okay. All right, so give you a moment to get on and switch hands because I need a drink of water. Okay, so I want to welcome you to the show. When you tune in, you're going to hear about a lot of different topics. You're going to hear about life, business. You're definitely going to hear about tax topics, as I am a tax professional. And people got tax questions and I got to answer them. And so with this being tax season, I'm answering a lot of tax questions at this time. Good morning, Aunt. Good morning, Winetta. But when it's not tax season, you'll hear about other stuff. Life and business and just how to do this whole thing we call life a lot better. Okay, so although today's topic is not exactly a tax topic, but it's one of those things that I believe people don't know, but really need to know. And it's about the FDIC. Okay. The reason for this broadcast is I saw on Instagram someone who posted a copy of their what looked like the receipt. That's the word. Woo! The receipt from when they took some cash out of the bank. Okay. And this person showed, I need to get my notes up. I have them up on my screen here. And the person showed a balance of having about $12 million in the bank. Like, you know what? For me, woohoo, for you, you got 12 mil in the bank. That is freaking awesome. I'm doing backflips for you. However, the ex-bank teller in me made me start to wonder if that person really understands what FDIC insurance really is. So let's talk about the FDIC. What is that? Because you see it on banks all around. Well, it says that we're FDIC insured. So what does that mean? All right. The FDIC stands for Federal Deposit Insurance Corporation. And this is an independent government arm that was established by Congress to monitor the banks in the banking system to make sure everybody's operating well and all of that, right? To prevent a crash that happened, I want to say in the 30s. Now, what they do is, they keep an eye on the banking system. And the FDIC, although it is an arm of the government, it was created by the government, it's not funded by the government. The FDIC is completely funded by the banking industry, where banks have to pay premiums, have to pay annual premiums. And depending on the level of the FDIC, they can have to pay those premiums up to 3 years in advance. So what happens is, if a bank fails, right, this is where the FDIC steps in to protect depositors. But this is the part that you need to know. So your deposits right now, the limit for the FDIC insurance is $250,000. Now, while most of us don't have $12 million sitting in the bank, there are plenty of people around that have $250,000, $300,000, $500,000 in the bank. So what does that mean? Well, that means that should something happen to your bank and your bank fails, only $250,000 of your money is protected. Okay. So that means if you've got $500,000 sitting in the bank and the bank goes under for whatever reason, then FDIC is only required to give you access to $250,000. So I was thinking about this person that showed this receipt. If you've got $12 million in an FDIC insured bank, that sounds really cute. But if that bank goes under, then the only thing that you're going to get back is $250,000 of that $12 million. All right. So the bank, and the FDIC only covers deposits, where you go and deposit your money into your bank account. It doesn't cover other bank products like investments and stocks and insurance policies and annuities and all of that. It doesn't cover that. We're talking about money actually deposited into the bank, and it only covers up to $250,000. It used to be $100,000 until a few years ago. I think President Obama raised that limit. So when you're talking about having multiple six figures in the bank, you really need to do one of two things. You need to take out additional insurance to cover the remainder of your money, or you need to have multiple bank accounts that don't exceed the FDIC limit. Because when you do, like I said, when you have more than $250,000 at this point in a bank account, and something happens to your bank, it fails for whatever reason, anything over 250,000 is gone. Deuces to the 250,000. Now, there might be some people watching this video thinking, okay, well, who's got $250,000 in the bank? Listen, we're in business to make money, okay? That's what we're here for. We're in business to make money. And if you don't see yourself getting to the point where you have $250,000 in the bank, listen, you're not going to get there, okay? You need to have some forward thinking here and understanding that when you get to that point, you really need to look at your banking practices and, how you can best protect yourself in the event of a bank failure. Because listen, the people back in the 30s, they didn't see the bank failure coming. People lost their life savings because their money was in a bank that went under. There was no FDIC back then. Now there's more oversight, and there are more eyes on the banking system to make sure that the banking system stays in play. However, in the event that failure does happen, which, would it happen today? No. But it's possible, because there are banks that fail all the time. We just don't hear about them because they're small banks. So yeah, you'll hear about the bigger banks, that goes along with that too big to fail type thing. But when you're in a smaller bank, banks fail all the time. So, that's your little interesting tidbit for today. When we're talking about FDIC insurance, the current limit right now is $250,000. If you've got more than $250,000 in the bank, if you consistently have that amount of money in the bank that is just there in, cash and for you to withdraw or what have you, listen, open another bank account is what you need to do, so that you can have another bank account that is protected so that you can get your money. Okay. So that is the interesting non-tax tidbit for today. But I feel like I had to share that because I think people see, the FDIC insured sign on the bank and think, everything is hunky-dory. Well, yeah, it is, as long as you have less than $250,000 cash in the bank. Anything over that is left uninsured. So there you go. That's your interesting tidbit for today. So thank you so much for tuning in. I hope I shared some shared a little bit of knowledge with you, things that you just need to know. Okay, that's it. Make sure you subscribe so you don't miss anything. I also post these on my YouTube channel, so make sure you subscribe so you don't miss anything there. Okay, so thanks so much for tuning in. I'll see you next time. Bye.